The market is choppy and people have stopped paying attention. But XRP is sitting on a secret setup that could take it places it's never gone before. It's the only asset that's been through lawsuits, dumps, and endless FUD, but is quietly positioning itself for what could be one of the biggest setups we've ever seen from XRP. I've spent weeks, actually months, going deeper than anyone else on this. I've looked over charts from the last decade, spent hours talking to my fellow crypto geeks, and ended up digging into strange technical frameworks that most traders have never heard of. And what I found? A textbook pattern that's historically signaled major moves, and it's unfolding right before our eyes. This isn't just a squiggle. It's a pattern that's predicted some of the biggest breakouts in crypto history, including Bitcoin's early runs and major altcoin pumps in 2021. If you're part of the XRP army, or a casual holder, or even thinking about selling because of the recent FUD, stop everything and watch this entire video. What I'm about to reveal could be the difference between cashing out at $3 or riding this to a lot further beyond that. Trust me, by the end, you'll see why this pattern is the key to unlocking XRP's true potential. In this video, I'm going to reveal the pattern for you. It's so precise, it's like the market's secret playbook. I'll make it easy to understand even if you're new to charts, and show you step by step how XRP fits into it. We'll zoom in on the exact phases, where we are right now, and what that means for the next big move. And I'm going to end this off with the implications, price targets, the risks if things go wrong, and why this could be the final shakeup before liftoff. This isn't hyper FUD, it's a data-driven analysis that's going to blow your mind. Stick around because if you skip ahead, you'll miss the connections that tie it all together. If you're ready to roll, then hit the like button and let's start. And just a reminder that I'm not a financial advisor and this video is for educational purposes only. Crypto is very risky, so make sure you do your own research and never invest more than you're willing to lose. With that being said, let's set the stage. So XRP has been the ultimate underdog story in crypto. Way back before 2012, Ripple had a vision to change cross-border payments. It's been dealing with the SEC lawsuit since 2020, and that crippled its price for years. Remember when XRP hit that all-time high of $3.40 back in 2018? It felt like we were going Super Saiyan. And now, this year, we've seen it rally to new highs with ETF hype and regulatory wins like the Genius Act, but then came the dips. Chris Larson's massive $175 million sell-off triggered a 19% crash. There was $113 million in liquidations, and suddenly everyone's questioning if the dream is dead. Whales are dumping, retail is panicking, and the chart looks like it's bleeding out. Sound familiar? This is classic crypto PTSD. But here's where my research flips the script. While everyone focuses on the tariff tensions, Fed rate cut hints, and Bitcoin dominance, I went deeper. I talked to some of the sharpest minds in crypto and studied the information that you never find on YouTube. And there, hidden in plain sight on the charts, there's a blueprint so powerful, it's the exact playbook for how the smartest money accumulate in the shadows before exploding upwards. This pattern has predicted breakouts in everything from Bitcoin's early days to altcoin pumps in 2021. For XRP, it's playing out right now, and if you understand it, you'll see why the recent dip isn't the end. It's actually the setup for something a lot bigger. Now I know what you're thinking. Another pattern? We've heard it all. Head and shoulders, cup and handle, golden crosses, but this one, it stands out. It's a strategic roadmap of how big players manipulate markets to shake out weak hands and build positions. And when you look at the on-chain data, it all lines up. Whale accumulation hit $400 million in days, exchange reserves are dropping as tokens move to cold storages, and futures open interest went up to $10 billion. This isn't random, it's intentional. The XRP army knows the struggle of holding through FUD, and this pattern explains it. For holders, it solidifies your conviction. The alignment with XRP's chart is mind-blowing. It connects the lawsuit resolution, ETF approvals, and institutional inflows into a clear narrative. So let's reveal it. The pattern I'm talking about is the Wyckoff accumulation pattern. It's named after Richard Wyckoff, a legendary trader from the early 1900s. This isn't voodoo. It's a proven method based on observing how institutions and whales accumulate assets without making it obvious. Wyckoff realized markets don't move randomly. It's all orchestrated. In accumulation, smart money buys low during fear, creates base, tests for supply and takes off with a big price increase when retail piles in. It's divided into phases A through E, and once you see it, you can't unsee it. Let me break it down for you very simply. And don't forget, guys, if you are following these patterns and trading perpetual futures, I have a brand new partnership with Margex. It's important to have multiple exchanges, and having the right setup can make all the difference. Margex has been super reliable when things get volatile, and timing really matters. You'll get up to a 20% deposit bonus if you use the code FireHustle, and this will only be available for a limited time. The link is down below. I would love to know what you guys think. Now back to the Wyckoff phases. So phase A, this is the stopping of the downtrend. It starts with preliminary support labeled PS on the chart, where selling starts to slow. After a sell-off, like we saw in the 2022 bear market, volume jumps during the selling climax, labeled SC on the chart because of panic selling. Smart money steps in to buy up all that supply, leading to an automatic rally labeled AR on the chart, and prices bounce back initially. Then it's usually followed by a secondary test labeled ST on the chart, confirming the bottom. Overall, phase A is where the bleeding stops. Phase B, the building of the base. The price bounces around in a range with ups and downs, and there's more secondary tests labeled ST on the chart to test supply and demand. Wills accumulate quietly, shaking out weak holders with fakeouts. Volume dries up, and it feels boring, like nothing's happening. Phase C, the test or spring. This is the trap. The price dips below support one last time, scaring away the last sellers. If it's a true accumulation, it bounces back hard, confirming that there is really no more supply left to sell. That leads us into phase D, the last point of support, labeled LPS on the chart. This forms as dips get bought up aggressively, setting the stage. Then signs of strength, labeled SOS on the chart, is a push up as the price breaks above resistance with increasing volume. And finally, phase E. Markup begins. The breakout happens. The price goes up big time and FOMO kicks in. This is where we enter a bull run. That's Wyckoff in a nutshell. Easy, right? It's not magic, it's psychology. Smart money accumulates when fear is maxed, then rides the wave while greed takes over. Now, let's connect this to XRP. Pull up the chart from the end of last year to now. This is the daily time frame, but weekly works too. What you'll see is a near textbook Wyckoff accumulation playing out. Let's map it phase by phase, starting with phase A. After the brutal bear market and ongoing SEC drama, XRP hit rock bottom around 50 cents in November. That was the selling climax panic from retail, and the fear was amplified by Chris Larson's previous sell-offs and global tensions. Weekends got shaken out, but look closer. On-chain data showed whales starting to buy. Preliminary support formed a while before this point, halting the downtrend. This led to the automatic rally, which was that explosive surge from 50 cents to just under $3 between November and December. A quick rebound that tested demand and absorbed more supply, but it wasn't the full breakout yet. Moving to phase B, from December onwards, XRP traded in a very choppy range with a lot of volatility, testing both resistance and support levels over and over. Frustrating higher lows, but no real breakout. Remember the fake pumps and dumps? That was testing supply. Volume thinned out, FUD spread on social media about the lawsuit dragging on, shaking out retail. But whales? Well, they loaded up billions in accumulation reported by TradingView. This base building is pure Wyckoff. Ripple partners and institutions buying cheap while everyone else slept. Phase C hit in May to June, the spring. XRP dipped below $2 support because of the broader market fear from tariffs and Bitcoin's pullback. It looked like the end. Liquidations happened and Reddit posts showed some panic. But while everyone was selling, whales just kept eating it up. And surprise, surprise, it bounced back hard. No more supply. The trap sprung. By July, we entered phase D. The last point of support formed as dips got bought up aggressively, showing buyers stepping in hard. XRP then broke above the resistance with a bump in volume and futures open interest hitting $10 billion. Whale activity exploded. Almost $1 billion. This wasn't random. It was signs of strength, smart money signaling readiness, and now in August, XRP sits around $3 after a minor dip right at the cusp of phase E, the markup. The chart shows compression breaking upward with relative strength index divergence flashing bullish. If this holds, we're gonna take flight. If you're finding this information insightful and want to level yourself up with even more alpha, then definitely come join me in the FireHustle VIP Discord. My team and I work around the clock to deliver the best value. Just look at what we've been cooking up here. Everyone's super happy with what we've put together. The feedback has been great and we're always improving. The link is down below. Come and give it a try. Now, when it comes to Wyckoff, what does this mean for where XRP goes next? Buckle up, this is the exciting part. In Wyckoff, phase E is where the real money is made. A sustained bull run as retail FOMO floods in. For XRP, that could mean shattering all-time highs and targeting a much higher number by the end of the year. Why? The catalysts align perfectly. The SEC lawsuit wraps August 15th with 95% ETF approval odds. The RL-USD stablecoin is gaining more and more traction, and institutional partnerships haven't stopped. And we can't forget the millions of tokenized assets that keep growing month after month. For those of you that want to get specific with targets, the best method is to measure the Wyckoff base width and apply a multiplier. Markups are typically 1 to 3 times up after the breakout. We've been discussing some amazing in-depth calculations in the FireHustle VIP Discord, so come join us if you're interested in going deeper. Of course, risks exist. Phase D can fail if support cracks because of macro events like rate cut delays or geopolitical jitters. We could retest phase C lows, and that delays the markup. Wyckoff isn't foolproof. External factors like another Larson dump could invalidate it, but the alignment is too strong to ignore. XRP holders, this Wyckoff pattern isn't just lines on a chart. It's proof the game's rigged in your favor. The army is being battle tested and the payoff could be coming. Everyone should study this pattern. It might change how you trade forever. We've covered a lot of deep research here revealing Wyckoff, the XRP phases, and the future potential. If you've made it this far in the video, then what price target do you think is realistic based on this? Drop your thoughts in the comments down below. I read all of them. If you got value out of this video, then be sure to subscribe for more breakdowns and stay tuned for more updates. Remember, this video is for educational purposes only and is not financial advice. Do your research and trade smart. Thanks for watching, and I'll see you in the next one.